Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Monday, April 6, 2015. Inside the numbers today, we're going to talk about the SPDR and the E-mini contract. We'll do crude oil. We'll talk about gold, interest rates in the bond market, and we'll give it a wrap. We might even touch on the dollar if I can remember. Okay, so let's move over to the SPDR, the SPY daily chart. Now, you had, let's go to the daily, the intraday chart here so we can get a full picture of what happened, because I think it's important. It'll play into what I'm going to tell you in a little while. So today, the market gapped down, and if you reel back the tape to Friday, we did have an employment number report on Friday. It was a poor number, the phony report, whatever the case is, it doesn't matter. The point is that the market reacted on the downside, and the futures contract went down about 20 points, and then it shut down at like 9:15 or something like that, and that was it. And then the weekend comes. Now Sunday night, we're down. Now the market starts to climb back Sunday night, but it was still significantly down from where it closed on Thursday. So we're down overnight, we're down early in the morning, and then all of a sudden, look at this Jack the Ripper. Look at this market reverse, and what this is telling you is there's a bullish tone under the market. There was absolutely no reason for the market to just flip side, 180-degree reverse course, and just rocket higher today, other than the fact that we're in a seasonally bullish period of the year, and you can expect higher prices. I've been telling you higher prices are coming. No matter what the case is, higher prices are coming until when? Until this happens. So let's go over where is our line in the sand and where are we going. So let's try and give some kind of a map for where we go. All right, so right now we're above the 20 and the 50 period moving average. Don't be surprised tomorrow if you come to back test that. Maybe only 4 or 5 points down in the S&P contract. You know, it's a 50 points. 50 cents roughly, 40, 45, 50 cents from where we closed today. And don't be surprised at that. That could happen early in the morning. Anything could happen, but I expect that to happen. So anyway, basically, right now your line in the sand is 204. Any hourly close is the first sign that you're in trouble. Okay, if you begin to close hourly below the 204 level, and the coinciding number is going to be about 2036 on the S&P E-mini contract, and if you close daily below 204 and daily below 2036 on the E-mini contract, it's going to be probably lights out, and you probably have another 90 to 100 handles down on the S&P contract, or 9-10 points in the SPY, bring the market all the way down in this neighborhood here, right? All the way down in this zone here. Okay, we don't know exactly where unless we got into that scenario, and then we'd be able to calculate based on momentum and pattern what the target price would be. But right now, we're not worried about that. What we're worried about, what happens if we keep going higher? Where's our next area of resistance? Okay, right now, this pivot high from here is going to be your first area you really have to get through. That's going to be tough to achieve. That's going to be 209.35. And if you're looking at the E-mini contract, let's get the coinciding number. Okay, it's right here. It's 2089.25. Okay, so you're going to have to close above those highs. Okay, let's go back over to the SPY. You're going to have to close above this high here in order to challenge this high and then this high. And then we have the 212.97 from this, if I remember the number right. 212.97, yep. So you really have three stages. This, and then the fourth stage is here. And once you bust through that, if you do, then we'll keep going higher, and we'll give numbers when we get there. We don't need to give them now. So that's kind of where we are. So do we see bullish tone for the remainder of the week? Well, you're probably going to see a little bit of some backing and filling maybe tomorrow, maybe Wednesday. On a reversal day like this, while the market's strong, I would have liked to see higher volume. Right now, you only had 115 million shares today, and even on this down day here, you had more On this down day, you had 137, 138 million shares. So really we need to see better volume. That signifies more conviction on the upside. That signifies institutional buying. And I just, in a while I haven't talked about the IWM, so it's worth a mention here because I thought what was interesting was the IWM was not the strong index today, okay? And nor was the NASDAQ. So those are typically the riskier assets. And usually when the market is strong, you're going to see money flow into the IWM or the Russell 2000 index, which represents small business across America, and the NASDAQ, which represents the technology and the high beta names, which means that they have higher volatility to the market average or the S&P. Okay, so we saw an underperformance in the Russell and the NASDAQ, which means maybe, just maybe, we're not totally out of the woods yet. It's just something to note. We just don't know exactly when we're going to rocket higher, but we will. Okay, so this is markets until you close below 204 and until you close below 2036 in the E-mini contract. Pullbacks are meant to be bought, okay? So let's say you get a pullback tomorrow on light volume. That pullback is meant to be bought, or you're looking for stocks that come into support levels to buy. Okay, so that's the kind of market environment we're in. All right, let's switch over to the gold market. And gold's down a little bit in after hours, but we had a nice big $20 update today. It actually went a little bit higher than that, but pulled back a little bit towards the end of the day. But that's okay. Let's show you where we're pulling back to. Okay, all you're doing right now is you're testing this this gap window from here, which is 12.12.61, 12.12.50. Well, let's get the exact number. The low here is 12.12.60. Okay, so that's what you're testing right now. May come down to the 50-period moving average, but as far as if you want to look at GLD. And you'll get a better picture of what to expect during, regular market hours. If you look here, you don't have the same type of gap area because the GLD doesn't trade 24/7 and the gold futures does. But you could come down into this 20-period moving average, maybe this high here at 116 tomorrow. That's okay, but there are higher prices coming. Where are the higher prices? Well, let me go to the daily chart, and I'm going to show you where higher prices are. Higher prices are coming up to the 119 area, okay, right in this neighborhood, which is a pierce of the 200-period moving average. And then you're going to get up into this 121, 122 area. And then hopefully if we can build a base around that and build up any momentum, we get up to double top. But it's one step at a time, and nothing moves in a straight line, and you're going to have to take it one day at a time. But like I've been telling you with gold, I've been telling you from here, pullbacks are meant to be bought, right? So as soon as this market broke this purple trend line that we drew in here, when? We drew this in here on the 18th of March, okay? So we're going back almost 3 weeks ago, about 3 weeks ago. Okay, we drew it in, and I said if it gets above here and closes above this trend line, it's going to be off to the races, okay? And then you know where you're wrong, you know where your line in the sand is. And what happened? We closed above, off to the races. What did we get? We got an A, a B, and I said this is to be bought, right? I drew this green line, and I said this is to be bought anywhere in this neighborhood. A, B, C. Right? How many times have you heard me say that? A, B, C. That's exactly what's happening. I told you A, B, C when we were over here. A, B, C. Pullbacks are meant to be bought. We said that over here. So pullbacks are still meant to be bought. On the gold futures contract, where's our upside target? Our upside target's going to be 1240, 1241, something like that. So we're probably another day or two away, strong day or two away from upside in gold. But you could see a pullback first, but that's not out of the question. But pullbacks are meant to be bought. Crude oil. Nice big update today in crude oil. Where are we? We're back inside of our channel. Okay, so where are we going? We could possibly go to the top end of this channel. We had a big convincing update today. We were right to the top of this day here, 52 and change, and we stalled out, and we'll have to see. If we get another update tomorrow, you're going to go up to the top of this channel. The top of this channel represents about $56, and it's not all going to happen in one shot, but that's kind of where we are. I would look for a pattern to emerge, maybe something like 2 or 3, 4 days of sideways trading, and then we can build momentum to go the next leg higher. But that's where we are in oil. Nothing more, nothing less. What else? We want to talk about you know what? Let me circle back to GDX. I know some folks like to talk about GDX. So GDX, we came into this high here, and like gold, it's going to track gold. There's higher prices for GDX. We could easily see this 200 period moving average 21.5 to 22 in GDX on this move in gold, coinciding with gold 1240, 1241. So just a touch on GDX. If you're long GDX, you should have a trailing stop in. Worst case, a stop below this low here for higher prices. Okay, let's go over to the bond market. We'll do TLT. TLT pulled back today a little bit, but what's interesting is even though we're in no man's land, we pulled back into the 20-period moving average today. I have on my cycle work tomorrow as a cycle bottom for the bond market. Now, that means higher bond prices, lower yield. Now, that's kind of interesting if we're going to see higher stock prices. So something might not jive there. We'll have to see how tomorrow unfolds. It does concern me a little bit that I have a cycle low for bonds, which means higher prices, which means higher TLT prices. And where could the higher prices go? We could go up to 132, 133 on TLT. But what's interesting is if you flip over to the yields, how much lower are we going to go in yields? I said the low I see us going is about 1.8. And if we go anything significantly lower, are we going to go test double bottom? And if we do that, is the market telling us there's trouble in the stock market? So I don't know. It's just a theory. We're going to take that one day at a time and see how it unfolds. But I like to take notice when I see cycle tops and bottoms in markets that don't normally contradict each other. I just want to take notice. I noticed the IWM was not the strong horse today. Now I'm noticing a potential rally due in the bond market, which doesn't necessarily jive with higher stock prices. Normally, money would flow out of the bond market into the stock market if we were going to see a rally in earnest in the stock market. So these are the things I'm watching. I'm just giving you what's in my head and just letting you understand some of the indicators on a broad scale that I like to look at to give me clues on where the market might go, because the market is talking to us. Believe me when I tell you, folks, the market tells you what's going on. The question is, are you taking the clues, are you taking the signals, and are you able to put the pieces of the puzzle together to build a roadmap in order to put trades on? And that's what it's all about. It's all about being able to put trades on in order to make money in the highest probability scenarios that we have. And that's what we're out to do here. Okay, folks, I'm going to leave it there tonight. We'll leave the dollar. There's nothing going on there right now. We'll talk about the dollar tomorrow night. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.